chapter number 10, Audit of Banks. In this particular chapter, we'll be understanding the legal framework for bank offered audit, how financial statements are checked. We understand the audit approach for profit and loss, advances, NPAs, and we understand the practicality of these concepts by examples and case studies. So first of all, we'll see what are banking operations, what is the accounting system of bank, audit approach, advances and their audit and audit of revenue items. So it starts with an example here that Samir was very comfortable with mobile banking app and used to do most of his banking activities like payment of bills, payment of little gifts for mother, but wherever needed, there was a common contribution. He used to send money through UPI using VMAP. One day he visited local branch of the bank, in which his account was maintained, and since cash machine was out of order, it made him realize that there is a trail for every bank transaction. There is huge volume of bank for that core banking solution platforms are used. He was trying to understand how bank accept deposits from its customers, what is the rate of interest charge, how it is lower, how it is spread to meet the admin cost out of profits, what are NPAs and all. So giving introduction, banking sector is backbone of any economy and it is very essential to know how it works so that its utmost importance ensures us healthy, safe and sound monetary transactions. Okay, now there are different types of banks, commercial bank and regional rural banks. So under commercial banks, we have cooperative bank and development banks. Under regional rural banks, we have payment bank, small finance bank. So commercial banks are most widely spread across India. Its two main functions are accepting deposit and granting advances. So every normal bank, which are very common, they accept deposit and they grant advances along with few other specifications make them as commercial banks. Then comes the category of regional rural bank, RRBs. So RRBs, their main banking need is to cater the financial needs of rural communities for which they are made. Say for example, we have various banks in the name of cities. Those are made to fulfill the financial needs of that rural communities, those particular communities. For example, we have Punjab Gramin Bank, we have Tripura Gramin Bank, Allahabad UP Gramin Bank, Andhra Pradesh Gramin Vikas, etc. Then we have cooperative banks. So these are set up under Cooperative Society Act, Multi-State Cooperative Society Act, and they are usually for catering agricultural and rural sectors. Again, examples we have Gujarat State, Chhattisgarh Bank, etc. Then we have payment banks. So nowadays we have new types of banks which are recently introduced by RBI. However, they only are allowed to accept restricted deposit, but they cannot issue loans or credit cards. But their customers can open current and savings account. Example, Airtel Payment Bank, India Post Payment Bank, Paytm Payment Bank, etc. Then we have development banks. So you might have heard name of HDFC, that is for housing development. We have IDBI, that is for industrial development. We have IFCI, that is for Industrial Finance Corporation. These banks, which majorly focus upon economic growth of the country, these banks are called as development. It may be infra related, it may be agriculture related, it may be small industries related. So such banks who are conceptualized to provide funds for infrastructure facilities are known as development banks. Then we have small finance banks. These are set up by RBI to available basic financial and banking facilities for unorganized and small sectors. Examples of these banks are Equitas, Small Finance Bank, AU, Small Finance, etc. So their main motive is to serve unserved and unorganized sectors. So two major functions of bank, accepting deposit and granting advances. The RBI logo. So what is RBI? RBI is a regulating body. It is functioning of banking industry. It is done for RBI. So RBI is majorly responsible for development and supervision of constituents of Indian financial system. That is, it comprises of both banking as well as non-banking financial institutions. So in conjunction with central government, the monetary and credit policies are keep in check with RBI. Then they regulate the activities of commercial and other banks. Important functions of RBI. We are very commonly aware. Every note has signature of governor of RBI. So issuing currency, regulating currency in the market, acting as a banker. So recently when 2000 rupee note was demonetized by the government. So what was that? That was an act of the government done in coordination with RBI to regulate the black money in the market. So this is one of the example of regulation of currency issue. RBI also act as a banker both to the central and state government. It act as a banker to commercial and other types of bank. RBI also has been entrusted with responsibility of regulating activities of commercial and other banks. So no bank can commence the banking operation without obtaining license. That is, issuing license to bank is also done by RBI. And RBI has the power to inspect any bank. So independent audit of financial system of bank is very important as it is for a healthy, safe and sound banking system. Now, banking operations which are conducted only at branches, those are mentioned here. So there are various activities, okay, like administrative offices that lays down policies, systems and internal control procedures. And in compliance of accepting accounting principles and practices, they also stipulate the delegation of powers to fix responsibilities. That is, banking operations which are conducted at branch level is regulatory imposition, controlling offices, delegating powers, accountability. These all are generally in supervision, monitoring, and controlling the business activities and operations done at the branch level. So, regulatory framework for banking, we have Banking Regulation Act 1949. Then we have State Bank Act 1955, Companies Act 2013, Banking Companies Act 1970. So these are all the earlier ones, 1970, 1976, 1980, Information Technology, IT Act 2000, Money Laundering Act 2002, that is prevention of money laundering, securitization and reconstruction of FA 2002. These all are the regulatory acts under which banking system prevails. Apart from that, we have Credit Information Companies Regulation Act 2005 and Payment and Settlement System 2007. So above all this, the provisions of RBI Act 1935 are also affecting the functioning of banks. RBI has wide powers, peculiarities, that is, its specialties involves huge volumes and complexity of transactions, wide geographical spread of bank networks, large range of products and services offered, extensive use of technology, and strict vigilance that is checked by the banking regulator. Clear so far? Do you have any doubt here, Anil?
No doubts. No doubts.
All right, now types of bank. Types of bank audit report which has to be issued generally. So presently the statutory central auditor SCA, they have to furnish the following reports in conjunction, that is along or in addition with the main audit report. So first is report on adequacy and operating effectiveness of internal controls. How are the internal controls of the bank or the financial organization functioning? Then they have to provide LFAR, that is long form audit report, report on compliance with SLR. So SLR requirements, report whether the treasury operations of the bank have been conducted in time, report on whether the income recognition, asset classification and provisioning has been made. So asset classification is classifying them as, NPA or secured asset, such kind of classifications. So provisioning is also three types: under 1 year, 1 to 3 years, and 3 years and above. That is provisioning of time. And report on whether such any serious irregularity was noticed in the working of the bank which requires immediate attention. These all reports have to be furnished. Apart from this, report on the status of compliance of the bank with Ghosh committee, that is related to fraud and malpractices, and the recommendation of Jilani committee on internal control and inspection credit system. Again, report on instances or examples of adverse credit deposit ratio in rural areas is also required. Now, to understand accounting system in banking, where earlier customers had to physically visit bank, we see a drastic change in the banking technology, where today people can access the banking system, their data on real-time basis, anytime, anywhere through the apps. So many customers today have access to internet, mobile phone, and they use e-banking. But for core banking technology and extensive advancement, banks could not have such phenomenal accelerated growth. Customers have used to modern technologies, but for bank, it was not that flexible. Transactions of the bank have become voluminous. Volume has increased. Again, data storage, data integrity is a problem. The system has to be error-free. Omissions, irregularities, and fraud should not be there. And considering this challenge, there was required a system which is robust, convenient, safe, and secure. Hence, in computerized environment, the auditor has to be familiar with all the norms and parameters as per the latest applicable RBI guidelines. And auditor should not go by assumption that the system information is correct, but he should use his professional skepticism and prudence wherever required. If something is manually required, auditor should have that level of judgment. He should be able to extract that data. Now, how bank audit approach is done? First of all, drawing an audit plan is required, very, very important. That audit plan should be based upon the nature and level of operations, nature of adverse features, level of compliance based on previous report, audit risk based on inadequacy or breach of internal controls, and familiarization exercise carried out. Second, control environment at the bank. So appropriate controls which are present in the bank, they should be effectively checked out. Segregation of duties should be there between front and back office. There should be accurate measurement and reporting of positions, verification, reconciliation, results, setting up limit, and physical security and contingency planning. Following are certain examples or certain steps, you can say questions which has to be kept in mind while undertaking control activities. So who? First question is who, second is what, third is when. Who performs the control? Does the above person have that requisite knowledge? What may comes, what evidence is available to demonstrate or prove the control? When? When is the frequency of the control performed? How frequently? Daily, weekly, monthly, semi-annually, annually. How frequently the control action is performed? And is it enough to prevent, detect, and correct risk of material misstatement is what has to be checked. Next is where, why, and how. So under where category, where is the evidence performed? Okay, or where is the evidence of the performance retained? It is stored in physical form, it is stored in electronic form, or it has been kept in a disk, or it has been kept in an electronic form. So where, how long the evidence is retained, कितने सालों से कंपनी के पास वो evidence है, few weeks, few months, few days, years, how long, and is the evidence accessible or available of audit? Say for example, company, okay, bank has its branch at Mumbai, and evidence, that is the inventory register, is in Delhi. So is this physical form of register, though it is present in another state, is it actually accessible or available for audit, is a question. Next question is why. Now, why this control is being performed? Say, for example, if there is cash register in the bank, okay, generally bank have two dual signatures. The one cashier preparing the register, and there is one more person who is double checking. So the question comes here, if there is this control of dual verification, why is this system coming into picture? What types of error are prevented or detected through the performance of the control? So again, the next question is how? How is the control performed? What are the control activities? Can these activities be bypassed? Can that be overlapped? If overlapped or if not performed, can those be detected? Is a big question. How are the expectations, deviations resolved on identification, and what is the time frame for resolving the expectations or deviation? Yes, Anil, any doubt?
No, ma'am.
Hello?
Yeah, ma'am, no doubts.
Okay, has anyone else joined? The camera is unmute. Could you please mute? All right. Regular intervals, I'll be keep on asking. If you guys have any doubt, feel free to unmute, interrupt, and ask me. Okay.
Okay.
So far it is clear.
Yes, ma'am.
All right. The next one is engagement team discussions. So all personals, okay, all people who are performing the engagement, including any expert, they are known as the engagement team. And this team should gain a better understanding of the bank and its environment, including what are the company's internal controls, what are the chances that is potential of for material misstatement. These discussions should be appropriately documented. Discussion between members of engagement team and audit partner should done on the susceptibility of banks, branch financial systems to material misstatement. These discussions are ordinarily done at the planning stage of the audit. So engagement team discusses the following matters. What are the errors which can be there, most likely to occur? Are those errors identified in the previous or prior years? What is the method by which fraud can be perpetrated by bank personnel? Which particular account balances should be checked? What are the audit responses to engagement risk, pervasive risk, and specific risk? And what is the need to maintain professional skepticism throughout the audit engagement? Also, apart from this, what is the need for information or other conditions that indicate material misstatement? Example, bank's application of accounting policies in the given facts and circumstances. So these all informations and details should be discussed internally through the engagement team and the audit team. What are the advantages of this discussion? Through this discussion, they get specific emphasis. A focus is provided on the susceptibility of the fraud or the areas where misstatement are present. Those can be engagement risk, pervasive risk, and specific risk. This discussion enable the audit engagement partner to delegate the work to experienced engagement team member so that the fraud is identified. Further, the audit engagement partner may review the need to involve specialist to address issues relating to fraud. Say, for example, there is a fraud relating to a jewelry, some gold which has been kept by the bank. Okay, the jeweler can be the expert in this case, the diamond merchant in case of diamond jewelries. Say, for example, there is a land paper, some land litigation or property papers have been kept. In that case, the real estate broker or a builder expert, he can be an expert in this case. So experts may vary depending upon the special areas where issues are relating to fraud. Next, we come to form and content of financial statements. They have balance sheet and profit and loss. Again, in Form A of third schedule, it contains the format of balance sheet, and Form B contains the form of profit and loss here. Audit of accounts, banking account should be audited by a qualified person. Now we come to the appointment of auditor. The auditor of banking company is to be appointed at AGM, annual general meeting of the shareholders. The auditor of nationalized bank has to be appointed by bank concerned through its board of directors. In case where approval of RBI is required, auditor of rural banks are to be appointed with the approval of central government. Are the appointments clear?
Yes, ma'am.
Remuneration. Again, the audit fees that is fixed in accordance with the provisions of section 142 as per the board's discretion. That is done in the general meeting in such a manner as the company in general meeting may determine. Again, the remuneration of auditor of nationalized bank or state bank is done by Reserve Bank of India in consultation with central government. Now, what are the powers of auditor here? Same powers which a normal auditor has to access books, to check accounts, documents, and vouchers. Then there's an audit report to be made, which should state the following: whether, in auditor's opinion, the affairs of the bank are true and fair, or whether whatever information is given by the bank is that satisfactory in nature. Second point, whether the transactions of the bank have come to notice with the powers of that bank, whether there have been return received from the office and branches of the bank which are found to be adequate, any other matter which that is the auditor, considers enough to be brought to the notice of the central government. If the audit feels such machinery has been purchased, such furniture has been purchased, and this again professional skepticism comes into picture here. So whatever matters auditor feel it is necessary for the government or its reporting body to know, such should come in the auditor's report. Report of auditor of State Bank of India is also made to central government, and it is almost identical to auditor's report in case of nationalized bank. Now, format of report is given here. So, reporting requirements here relating to CARO, that is company's auditor's report, is not applicable to banking company. Then we see LFAR, that is long form audit report. Now, this is very important report. It comes under one of the statutory requirements to bank, like public sector bank, private sector bank, foreign bank, as well as their branches, that they furnish this LFAR, that is long form audit report. This format is specified by the Reserve Bank of India, RBI. Statutory central auditors have to submit this LFR to the bank latest by 30th of June every year. And for this, proper planning is required. While the format does not have any executive summary, members may bring the following: the key observations from the whole document. Reporting is done to RBI. Now, there was a circular which says, if an accounting professional, whether in a course or internal or external audit, or in the process of institutional audit finds anything that is susceptible to the fraudulent activity, that that should be brought in the matter of to the regulator. Any deliberate failure on part of auditor, the auditor himself will be liable. So what this circular says, if at all, at any time he feels there is any fraud or there are chances of any misstatement, he should at that moment bring that to the notice of the regulator. If the auditor is purposefully not highlighting this, auditor himself is hold liable for this action. Clear so far?
Yes, ma'am.
Okay, we'll come to the next part.
Yeah.
SA5, 250 provisions like consideration of laws and regulation in audit of financial statements. It explains the duty of confidentiality, which is very important. SA 240, this is auditor's responsibility relating to fraud in audit of financial statements. It also makes auditor responsible for obtaining reasonable assurance that the financial statements as a whole are free from material misstatement. Next, how to conduct an audit. So, initial consideration by the statutory auditor is required. Should be a declaration of indebtedness. That is, RBI has advised banks before appointing the statutory or branch auditor, they should declare their indebtedness. Indebtedness is the situation where it is owing money to bank. अगर बैंक के ऊपर किसी और का कर्जा है, it is having loan or bank is indebted to somebody else, that report should be earlier made. This is advised by RBI. Second, internal assignments in bank by statutory auditor. So RBI has decided that the audit firm should not undertake any statutory audit assignment while they are associated with internal assessment in the bank. अगर internal assignment bank ने लिया है, so they are advised not to take statutory audit like concurrent audit and all. So concurrent audit is internal assignment, it comes under that category. Next is planning. As per SA 300, planning of audit is very important. It helps with the initial audit, wherein procedures under SA 220, that is quality control for audit work, which is accepting the client relationship is established. Again, agreeing the terms of audit engagement under SA 210 comes into picture here. That has to be taken into account while planning. There should be a communication or a communication with the previous auditor helps the current auditor to understand many things about the firm. Also, if required, he should get an NOC, no objection certificate from the previous auditor if he does not has any objections to the appointment of the new auditor for any valid reason. Okay, terms of audit engagement, SA 210. All the terms before beginning the significant portions should be clear. There should be no confusion. Auditor should be clear with the respective responsibilities, and the management should also be clear with the responsibilities before beginning the audit assignment. Next is initial engagement. So here SA 510 ke under, the auditor needs to perform audit procedures with required to initial audit engagement, that is opening balances, so that they should also check that there is no material misstatement in the opening balances. If at all he feels there is some mistake, the auditor should express a qualified or adverse opinion. Next, assessment of engagement risk. So this is very critical part of the audit process, and this should be done starting May before accepting the audit engagement. Also in planning decisions and all, this assessment of engagement risk should be assessed. The engagement team should be established wherein qualified and experienced professionals are involved. Again, depending upon the size and composition of the engagement team, that is dependent upon size, nature, and complexity of bank operations. Understanding the bank and its environment is very important. Again, SA 315 comes into picture here, wherein identifying and assessing the risk of material misstatement through understanding its environment. So understanding the entity and its environment is very necessary initially for finding the risk of material misstatement. Next is identifying and assessing the risk of material misstatement as we discussed under SA 315. That is done for designing and performing further audit procedures. Understanding the bank and its environment, including internal control, is very important so that the auditor can identify and assess risk, and auditor can develop an audit plan to determine operating effectiveness and controls to address the specific needs. Again, understanding bank process, identification of management, bank's internal control, these are all very important, and it should be checked whether there are no risk of material misstatement due to fraud or error. Understanding risk management process, if at all there is any risk. So what steps the bank is taking for effective risk management system? To understand that is very required. Their oversight and involvement in the control process by those charged with governance, that is board of directors, managing committee members. These should approve written risk management policies, and these policies should be consistent with bank business objectives and strategies, capital strength, management expertise, regulatory requirements, and types and amount of risk that is acceptable. Again, identifying, measuring, and monitoring these risks are very important. Banks should also have appropriate controls. Hello?
Yeah, ma'am.
Yeah, anything you want to ask?
No, ma'am. Whether this point will be in the questions or how will the questions arriving in this audit, conducting of an audit section, ma'am? Which questions can arrive here?
Okay, Anil, you're not audible. Can you please be little louder, or can you type your doubt?
Yes, ma'am. Under this conducting an audit,
Uh-huh.
which questions can arrive? In the first point, there is initial consideration by the charter auditor.
Uh-huh.
It contains 9 points.
Right.
And again, under this heading, there are more than 18. There are totally 18 points.
Yes, yes, yes.
Yeah, okay.
So you are confused which points to consider,
Yes.
right?
Yes.
Got it. So see, there are two different types of questions which can be formed here. So these 9 points, okay, which you are discussing, the question which can be formed for this is initial consideration by the statutory auditor. So here the question may come in exam, what are the initial considerations by the statutory auditor? This is one of the stage for conducting an audit. So if the question comes, what are the initial consideration for statutory audit? So these 9 points have to be written. If the question comes, what are the stages? So here we have stage 1, then we have stage 2, 3, stage 4, 5, again 5. 5 is understanding the process. If there is a separate question, what is the risk management process? Under risk management process, we have these points. Okay, oversight and involvement, identification, control activities, monitoring activities. Again, the sixth one, this is the stage
Okay.
of audit. 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. These are the stages
Yeah.
that has to be understood while doing the audit.
Okay.
Are you clear with the question and the answer?
Yeah, ma'am. Means
Okay.
I asked it because there are 18 points. If the
Mhm.
question comes, all the 18 points should be written, right?
No, Max. So if it is a 4 mark question, you can write 8 points, 8 to 10 points. That's it.
Okay, ma'am.
Okay. So we were on
Point third was completed.
stage 5, right?
Yeah, ma'am.
Okay. So fifth stage is understanding the risk management process. So understanding who are the people involved, like those charged with governance, board of directors, managing director. Then we have to identify, measure, and monitor the risk that could impact pre-approved limits and criteria. Then what are the control activities? Bank should have proper control activities for its, you know, segregation of duties, different risk, reconciliation of procedures, various positions, approval of transactions, physical security, and all this. Apart from this, monitoring activities to monitor the risk management, what are the methods used? This is an independent risk management unit. Then information systems should be reliable. Whatever information system they are storing their information, they should be complied on timely and consistent basis. Engagement team discussion should be done on a regular manner to understand the internal control and potential for material misstatement. There should be overall audit strategy as per SA 300, that is giving an overall strategy initially, and it is involving key engagement team members. Then developing that audit plan as per SA 300 is very important. Then audit planning memorandum should be there, that is summary. What is the expected scope and extent? What are the significant issues and risks? Those are identified. Okay, providing evidence which have been appropriate and in response to engagement risk, pervasive risk, specific risk, etc. Next stage is determining audit materiality. What things are material? What is important? Again, this is professional judgment depending upon the knowledge. Uh, Going concern should be considered that the bank is seeing its upcoming future and it has no plannings of winding up. Assessing the risk of fraud, including money laundering, should also be checked here. RBI has now framed specific guidelines relating to KYC. Now, this is a very common term, including the PAN, Aadhaar, residential proof, financial proofs, photographs, authenticating documents. These all are coming under KYC norms. Then assess specific risk. Auditor should identify and assess the risk of material misstatement. What are the risks associated with outsourcing of activity? Now, all the activities bank cannot do internally. Some accounting work or vendor are appointed for, at times for housekeeping, at time for bookkeeping, at time for managing the systems. So how are those outsourcing activities reliable, or what are the risks associated with it? That should also be understood. What is the response of risk according to SA 330? What are the auditors' responses to those risks? Stress testing. This is a software, okay, which is testing the activity, which determines the robustness of software by testing beyond the limit of normal operation. So this is a very important critical software and it is used for all types of software. RBI requires that commercial banks should put in place stress testing framework for their individual requirements. Again, Basel 1, Basel 2, Basel 3, these are regulatory frameworks. So Basel 3 framework is applicable here and important. Basel committee requires supervision and they have their FSB, that is Financial Stability Board. They do the regulatory framework reviewing, and it also helps to set minimum criteria in the new definition of regulatory capital. Against reliance and review of other reports should also be checked. That is previous year's audit report, latest internal inspection report, Reserve Bank of India's latest inspection report. What are the concurrent internal audit report, report on verification of security, or any other report specially related to particular account? Again, who is the manager's charge handing over report when incumbent is changed? Okay, are these 18 points their question and their answering bulletin clears?
Yeah.
Alright. Now advances. So advances, if that is the amount is insignificant, that can be checked. But if it is a large advance, which is say for example in excess of the 10% or 10 crore of the branch, whichever is less, that can be determined as a large advance. So advances are amount of money or credit given as a loan from bank to other party with the agreement that that amount will be repaid. So all bank loans are made at interest, which is compensated for borrowing. So generally bank constitute advances constitute the largest item of the asset side. So interest received on this advance is one of the major income source for bank. So types of advances are given here, both on funded loan and non-funded loan. Funded may where money is actually involved. There is actual transfer of fund from the bank to the borrower. Example, term loan, cash credit, overdraft, demand loan, bill discounted, etc. Non-banking or non-funded facilities may there is no transfer of money, amount or fund, but the bank is acting as a guarantor or bank is providing facility through which borrower or the client can have amount or take loans from other banks. Example, letter of credit, bank guarantee, these all come under non-funded facilities. So advances comprises of term loan, cash credit, overdraft, bill discounted, participation on risk sharing basis, and interest bearing staff loan. The legal requirement for disclosure in the balance sheet is, first of all, these assets should be classified. There are three categories here. Sector wise, they should be classified security wise and prudential norms wise. Sector wise, it comes under priority and broad priority sector. Security wise, it is secured or unsecured. And prudential norms, they are standard or NPA. So advances in bank, if it is from priority sector, public sector bank or others, it is advances in India. Advances outside India, it can be due from bank, due from other banks, bill purchased and discounted, syndicated loans and others. Okay, any doubt so far, Anil?
No, ma'am, no doubts.
Next is classification of advances, which we saw above. We'll just elaborate and understand two-liners. Now, sector-wise, okay, priority sector. Priority sector mein what are the priorities of the bank here? For example, agriculture sector, MSME sector, education sector, housing sector. These all come under PSL, that is priority sector lending. Security wise, bank asks security while lending loan. So nature of security, banks also have legal authority to sell this security or this collateral, which is the security provided to recover its money. Nature of security में first nature is primary security. It refers to the security offered by the borrower for bank or one against which credit has been extended. This security is principal for advances. For example, home loan. Okay, home loan में क्या होता है? Loan is given for home. If the loan is not repaid, the home is confiscated. Another one comes collateral security. So collateral security में both tangible and intangible. यहाँ पे comes the example of mortgage loan. There is an existing property that is kept mortgage with the bank, or there is a jewelry that is kept with the bank against which the loan is taken, and that loan is utilized for some other purpose, business purpose or for any other personal purposes. So most common types of securities which are accepted by the bank is, first of all, a person acting as a guarantor who is well to do, he has good salary or business income. So if one person, the original lender, fails, other person, the guarantor, will repay the loan. Second is goods, stock, data, trade receivable against goods, against stock, loan is provided. Next is the gold ornaments. We all know Muthoot Finance, Manapuram Gold Finance and all. Here, gold ornaments are taken as securities. Then immovable property, that is land, okay, flat, commercial godowns, shops. These all are immovable properties against which loan is taken. So plantations for agricultural advances, third party guarantees, bankers general lien, LIC life insurance policy के against भी loan मिलता है. Stock exchange securities, say for example shares are there, mutual fund securities are, debentures are there. Okay, against those also loans are given by the bank. So mode of creation of security. Now mortgage is one of, mortgage in the sense Hindi में it is called गिरवी रखना. There are two types. One is registered mortgage, where there is a registered instrument called as mortgage deed, which is signed by the mortgager. It registers the property to the mortgagee, that is the bank, as a security. If the loan is not paid, that particular registered asset or property can be sold to recover. Second is equitable mortgage. So here a normal delivery of the title deed or other document is done with with intent to create security. This was mortgage. Then comes pledge. Pledge mein what happens? It involves bailment of delivery of goods. So difference between mortgage or pledge is, mortgage mein the title, security or the deeds are with the bank. Pledge mein that goods is with the bank. Although the legal ownership of the good remains with the pledger, but the original possession is with the bank here. Clear with the difference between mortgage and pledge?
Yeah.
Or any doubt so far?
No, ma'am, no doubt, sir.
Sorry?
No doubts, ma'am.
Okay. We'll move ahead with hypothecation. So hypothecation is creation of equitable charge, that is, which is created in favor of the lending bank by execution of hypothecation agreement. So here and there is an agreement made in respect of movable securities that is belonging to the borrower. So no ownership or possession is transferred to the bank. The borrower is holding the physical possession, and borrower periodically submits the statement of the hypothecated goods or assets. Next is assignment. Assignment represents transfer of existing or future debt, that is claim to any debt or other than debt by a secured mortgage of immovable property. Hypothecation pledge comes here, such as book debt, life insurance policy. These are also accepted by bank as way of security of assignment. So assignment gives the assignee absolute right, okay, over the money's debts assigned to him. Next is set off. Set off is a statutory right of a creditor to adjust wholly or partially the debit balance of debtors account. So this set off is done wherein two accounts are combined, that is a deposit amount and loan amount. Okay. Say for example, if I have fixed deposit of 9 lakh with the bank, I have also taken a loan of 4.5 lakh with the bank. So against this amount which I have in the bank, this amount can be set off. This is known as the set off. Lien. Last one, this is again creation of a legal charge. This is done with the consent of the owner, which gives legal right to seize and dispose, liquidate the asset under lien. Next are prudential norms. These, I guess you have done this earlier also, very easy to understand. So there are two norms. The one is for standard loans, another one is for NPA. So NPA is something which is due over 90 days, and standard loans where we have standard, regular and SMA. If the SMA is zero, special mention account, it shows stress signal. SMA 1 is which is overdue between 31 to 60 days. SMA means special mention accounts, okay? So which is overdue between 61 to 90 days. Once it is exceeding 90 days, that is then termed as NPA loan. NPA loan mein there is substandard category, doubtful D1, D2, D3, and there is loss. That depends upon number of years. So NPA is basically a loan wherein interest or principal is overdue for more than 90 days and that remains out of order. Now, what is out of order? An account should be treated as out of order if the outstanding balance remains constantly in excess of sanction. Like balance amount is 5 lakh, but always the loan which is sanctioned that is above 6 lakh, 7 lakh, 8 lakh, and so on, which is always exceeding the basic limit of 5 lakhs. That was just an example. In case where outstanding balance in the principal account is less than the sanction limit and there is no credit, that is, no amount is recovered by the customer continuously for 90 days. So it is again a case of out of order. There are credit in those accounts, but that is not enough to recover the interest. Such account should be treated as out of order. Okay, we have this example also here. Now we'll come to overdue. So overdue, any amount which is under any credit facility is called overdue if it is not paid within the due date fixed by the bank. Now we have categories and their respective provision percentages required. For substandard, which is the period equal to or less than 12 months, the provision of 15% is required. Doubtful asset, there are three categories here, D1, D2, D3. If it is doubtful for 1 year, secured के लिए the percentage is 25%. For 1 year, for D2, that is 1 to 3 years, it is 40%. For 3 years, D3, it is 100%. These are for secured. For unsecured, where there is no security, it is always 100%. Where the asset is doubtful for more than 3 years, or for loss asset, loss category, the percentage of provisioning is 100%. That is, these are the percentage which we show as loss in the books of accounts. Clear so far?
Amen.
Okay, is the speed okay? Or do we need to speed more fast?
This section we can speed up.
Sorry?
You can speed up here, man. For NPS on there, you can speed up.
Okay, we can speed here, right?
Yeah.
All right, here I'll cover the part which is important.
Yeah, man.
So government guarantee advances, which is guaranteed or which is not invoked, that is classified as standard asset, but regarded as NPA for income recognition purpose. 90 days से ज़्यादा अगर it is overdue, so both provisioning and income recognition is required. Now advances under consortium. Consortium means advancing loan to a borrower by two or more banks. So joint appraisal, control and monitoring will facilitate exchange of valuable information. So usually bank with higher sale will lead the consortium. So consortium is basically two banks providing loan to one. So what are the advantages of consortium is they pool their resources, they share the cost, cheaper prices, the risk is spread together, and more lot of customers is done here. This is an illustration of drawing power for given for the month of December as per stock statement November 2022. State Bank, they're all percentages and the DP limits. The drawing power limits are mentioned here. The accounts where there is erosion in the value of security. Erosion, what is erosion? Erosion is gradual destruction or diminution of something which is not prudent for asset classification. So erosion in the security is significant when the realizable value is less than 50% of the value assessed. Such NPAs are always classified under doubtful category and provisioning should be done to that. If the realizable value is 10%, in that case, it should be classified as lost asset. For advance against term deposit, NCS, and these all, adequate margin is available in their accounts. Agricultural advances which are for affected by natural calamities, these loans are provided. A master circular is issued by RBI to fulfill the loss which is caused by, you know, the natural calamities, earthquakes, floods, drought, and all. Advances to staff. Whatever advances are given to staff member, interest bearing, okay, that should be included as part of advances here. It should also be classified NPA if there is any default in repayment of installment. Next is agricultural advances. Two types we are seeing here. Advances for long duration crops, short duration crop. So which takes more than one crop season are long duration crop, which are not in long duration, those are treated as short duration crops. So season crops is again depending on how do we calculate DP. So here this concept is very important for CC. There are different limits for different banks. So sanction limit is total exposure that a bank can take on facilities like cash credit, export packing credit, non-funded exposures, etc. Considerations. All accounts should be kept within both the drawing power and the sanction limits. So it is the bank's duties to ensure that the drawings in the working capital are covered under current asset. So drawing power is required to arrive after considering the difficulties in stock statement, large borrowers and all. They should not be older than 3 months. If it is there, it is deemed as irregular. Auditors' concern should be that these stock statements, quarterly returns, those are scrutinized in detail. Annual report should be submitted and monthly stock statements should be audited and submitted. Those should be compared for reasonable or to find out the reason for deviations. So computation of DP is generally formulated by board of directors and that is in agreement with concerned statutory auditors. Now stock audit. A stock audit will check. Stock audit should be carried out for all the banks who are having their funded exposure accounts of more than 5 crores. Now this is a report submitted by an example wherein stocks realizable value is 100 less unpaid stocks and everything, we calculate the DP. That is drawing power after this margin and deduction all we come to on. Then we have debtors. So debtors may we have the total debtors less who cannot in eligible. Can you hear me?
Yeah, ma'am.
Okay. Of course, after adding their margin, the total drawing power comes into picture that is calculated. Next is audit of advances. So in carrying out the audit of advances, following should be the primary concern. The amount should be included in the balance sheet. Advances should represent the amount due to the bank. Amounts due to the bank are appropriately supported. There are no unrecorded advances. They should state the basis of valuation, and advances should be disclosed, classified, and described in accordance to the accounting policies and practices along with statutory, relevant, and regulatory requirements. Also, appropriate provision should be made as per the rules of RBI, that is RBI norms, accounting standard, and GAAP, that is generally accepted accounting practices. Auditor can obtain sufficient appropriate evidences by examining the validity of recorded amounts, by examining loan documentation, by reviewing the operation of the accounts, examining the existence, enforceability, and valuation, checking compliance with RBI, and carrying out appropriate analytical procedures. Evaluation of internal control should check for advances, sufficient margins, possession of goods, drawing power register. Those all should be updated monthly. Account should be kept with both the drawing power and the sanction limit. The operation of each advance should be reviewed at least once in a year. There's again a case study given here. Now, audit of revenue items, profit and loss account. So here, profit and loss account is given. Income. Following items should be included: other income, interest earned, interest on investment, interest on balances, and others. It also includes other income like commission on bills, income for collection, exchange for RTGS, LOs, letter of credit, loan, mobile banking fees, credit debit card fees, renting of lockers, commission to government business, commission on permitted agency business, brokerage fee, commission service transaction, income from rendering like demat account and all, profit on sale of investments, P&L of revaluation of investments, revaluation of fixed assets, exchange transactions, income earned by way of dividends, and miscellaneous income. Apart from this, audit approach and procedures, auditors should be primarily concerned with obtaining reasonable assurance. RBI's direction should be properly followed. If any item of income is not considered, which is material, that should be recognized in the report. Revenue should be certain. Bank should recognize such interest, fees, and commission on accrual basis. If there is any significant revenue uncertainty, that should be highlighted. Advances against securities like term deposit, national savings certificate, Indira Vikas Patra, these all should be taken provided adequate margin is available in the account. Whatever bills are purchased, okay, considering unexpired discount, rebate on bills discounted, these all should be taken into account. Bills for collection, renegotiation, that is fees on commission on rescheduling, these all should also be checked for. For reversal of income, if any advance including bills purchased or discounted, it becomes NPA. In case of NPA, fees, commission or similar income, if it is uncollected, that should be reversed. In case of bank where income is wrongly recognized, that should also be, rechecked or deducted from income. Apart from this, additional large debt so which cannot be explained, should also be reversed on income. Okay. These assets, the component of finance lease should be considered here, that should be reversed on takeout finance. Now, takeout loan is a method of financing where procured loan is used to replace the initial loan. We can also call it as takeover here. What is the objective of takeout finance? To expand sources of finance for infrastructure project, to address sectoral group entity where mismatch concerns of tenders are there, and to boost the availability of longer tenor finance for projects. Okay, so far clear? Any doubt so far, Anil?
No, ma'am.
Okay, on partial recoveries in NPA, in absence of clear agreement, NPAs should be checked. Also, AS 9, that is recognition of income, should be taken into picture here. Interest which is partially or partly or fully realized, that can be taken as income. Memorandum account is an account which is prepared for a time basis, a limited time and not the entire years. That should also be considered for computing gross advances, interest and all. Income from investment, that is government securities, bond, debentures, broken interest period, profit on sale of investment, profit on loss of revaluation of assets. These all comes under income and reversal of income category. Now expenses may we have interest expense, operating expenses, provision and contingencies. So interest income may we have interest on deposit, RBI interest, other interest, operating expenses may provisions to employees, payment, rent, taxes, printing, stationery, advertising and depreciation. Provision and contingency, we have provision for taxation, provisioning for NPAs, provision for diminution, provision for contingencies. Apart from this, director fees, auditor fees, legal expenses, postages, telephone, repairs, maintenance, insurance, marketing expenses and other expenses also come under the category of operating expenses. Then audit approach and procedure. So auditor should be primarily concerned with the reasonableness of interest expense. Auditor should form or he should obtain from bank the analysis of various types of deposits. Auditor should also compare the average rate of interest paid to the relevant deposit. Auditor should check on timely basis the calculation of interest on deposit, interest on bank internal regulations, interest on saving account and interest on inter-branch balances. Also, for operating expense, auditor should study and evaluate the system of internal control. He should examine if there is any divergent trend. Auditor should perform substantial analytical procedures. He should verify expenses with reference to supporting documents. For provisions and contingencies, the auditor should check compliances with regulatory requirements, obtain understanding of how bank compute standard assets and non-performing assets, obtain detailed breakup of standard loans, obtain tax provision computation, examine other provisions vis-a-vis the circumstances warranting. Income may we have interest income, other income, which we studied earlier. It is presented in a chart format. Expenses may we have interest income, provision and contingencies and operating expenses. Apart from this, disclosure to prior period items is also done separately in Form B under third schedule to Banking Regulation Act. So I guess by this our chapter comes to end.
Yeah.
Any doubts so far, Ashish?
No, ma'am.
Sorry, Anil.
No, no doubt.